Welcome back to another edition of Check Call. Don't forget to subscribe to Check Call, the newsletter on FreightWaves.com if you haven't already. Today, we welcome back the one and only David Spencer, Vice President of Market Intelligence at Arrive Logistics. Welcome back to the show, David.
Thank you so much, Mary. Great to be back. A lot of things going on, and I'm excited to catch up.
I am excited as well. Most importantly, the newest Arrive Market Intelligence or Market Report came out, and I would just like to call out one notable change that I saw this time. And if you did it before, my bad, didn't notice. But you started with a from the desk of David Spencer. I thought that was a very nice little touch, that you guys have really increased the production value of your market intelligence report.
Yeah, no, it's definitely gotten a facelift, and our goal with that specific piece was really to bring the main takeaways up to the front of the dock, right? I think before it was really buried throughout, with a large amount of text, and the conclusion at the end. You almost expected every reader to get through it, get to that conclusion, and to get that insight. But if you have 2-3 minutes to read something, we wanted to draw everyone's attention to that sort of narrative at the top, and with the understanding of all the data below was definitely going to support those takeaways, right?
1,000%. I just like that you got basically your own kind of virtual stationery that you got to write from the desk of David Spencer. And I just imagined you penning this great, wonderful letter because apparently you write market intelligence reports in the 1800s, despite the fact that we're in 2025.
Look, I think the hardest part of that was getting my signature on the doc. It was, maybe I did 20 different takes before I was like, okay, that's good enough. But again, I think one of the things we joke about, right, is, the way people consume information, right? If you look at the PDF, we stripped probably 8 pages plus of mostly text, a lot of that redundant takeaways out of this report, and really focused on in each section, what have we seen recently, and as we look forward, what to expect, and try to include all that same data, but without a lot of that extra weight, and just make it easier for everyone to consume, and with a new look and feel.
I absolutely love that. I think that, sometimes improvement's better. Getting into the core part of it, aside from the right off the bat, start off strong with a note penned to me from David himself. But we are starting to see some of that demand soften, typically in the spring, we'll see kind of following January and February. Obviously, there's not really a lot of demand typically in those 2 months. They're historically, the calmest, quietest months in freight. But as we start going through March, we start seeing that increase in demand and kind of that return of kind of that possible volatility. I would say, my hot take is it's returned, but not, it's there still is that soft demand. Why do you think that we haven't seen that huge swing up of that spring volumes yet?
Yeah, it's a great question, and certainly getting to the finer details of the information is difficult to pinpoint exact reasons, but we think there's a couple of key factors. I think first off, what's becoming pretty clear, and I really like the CLAV, the contract load accepted volume chart, to make this point. But you can see that from really early October to date, we've been seeing declining accepted contract volumes in that report, and from my understanding, a lot of CPG volume in that data. And the way I read that is there probably was a pretty big pull forward ahead of potential port strikes last year, as we've seen a big dip in the a pullback fourth quarter and early first quarter back to levels we saw in 23 on that one particular data point. You look at the CAS index and you see February report showing down 5% year over year, and I think it was about 8% down on the 2-year stack change. You continue to see these declining demand variables. I think the port strikes, I think there was a pull forward effect from tariffs, although not as large and not as meaningful, as the port strikes. And I think just in general, The concept of private fleets gobbling up market share from the for hire market is resulting in a lot of these indexes reporting lower overall volumes. So, from a for hire perspective, that appears to be a demand pullback, but not necessarily is an overall decline in the volume moving out there on the roads, just what's accessible to those in the for hire space.
I think that the rise of the private fleets and kind of maybe more of like a dedicated fleet solution for some of your shorter hauls, and then still having for hire carriers for some of those longer hauls. I know a lot of shippers that I've worked with in the past really kind of that was their bread and butter. I'm surprised at how many people also hopped on that private fleet trend, because I thought that was like I just didn't expect that one to have like I didn't see that one in my crystal ball at all, basically.
Yeah, it's something that I think increased access to technology to help run these fleets more efficiently. You're seeing a lot of benefit, even if they are running kind of a lot of empty miles, in terms of how it helps support their service levels, and finding that capacity when they need it, where they need it. So you're seeing a lot of shippers invest and continue to invest despite the increased operating cost per mile.
1,000%, and I think that it's also kind of given shippers back some of that control, because I know starting basically in 2020 when there were carriers that were just making basically charging shippers whatever they could, making money hand over fist. I think that that kind of led some shippers to go, "Well, how can I protect myself against this in the future? And how can I kind of mitigate some of those things?" Not that obviously your private fleets wouldn't be able to, be able to take advantage of a situation like that, but it puts more of the control of what happens to their supply chain and how they keep things running. It puts it more in their hands. Um, which as a shipper, selfishly, I do love some control. I do love some control.
Yeah, no, we've seen some of that as well, and you see it on the RFP process, et cetera. But ultimately, it's a lot of targeted freight, stuff that's probably utilizing assets to run historically, and so as a result, you're seeing changing behaviors in the for hire asset space, right sizing, pullbacks, and employment. Definitely some interesting trends on the capacity side that. I think are relevant. The moving demand is kind of a moving target for where capacity is going to balance out to. But I think reductions in capacity have left this market vulnerable to demand shocks. It's just where is that demand going to come from in the far higher space?
1,000%. And there's been some different kind of like over the past few months, there's been some random regions that have had like a really high surge and in like outbound tender rejections like climbing well above 20%, and then like a couple weeks later they'll drop back down or they'll kind of level out. But it's been in a lot of those smaller regional markets where I feel like that impact hasn't really been felt as strongly as if all of a sudden Atlanta were to magically pop up to like 22% rejections. That would hurt, and that would do a lot more than I know. For example, a couple weeks ago, Augusta, Maine was popping, and they just had rejection after rejection after rejection. Um, and I was like, that's weird for such a small market. But I mean, I guess it makes sense because, even though outbound tender rejections on a national level are at kind of that point that makes them pretty equal to, or that it makes spot rates pretty equal to your contracted rates, like they're kind of hovering around 5%. That's not necessarily like every market is at 5%. We still have some of those regional market volatilities where they climb up a little high.
Yeah, certainly we're seeing demand shocks be the starting point and the kickoff point where you see those routing guide challenges for shippers. One of the my favorite views of tender rejections is just looking at the seasonality view, 23 versus 24, now coming in at 25. Each year seeing a slight step up in rejection rates, but where you really notice those differences are around peak seasons. So summer peak season, Q4 retail peak season, that's where you saw that separation, and that's where you saw those increased challenges. The rest of the year, when you're talking about more equilibrium conditions, capacity is well, matched to demand. That's kind of what I'm thinking and seeing on the carrier side, the large fleet side of things, is that uh, they're right sizing to match typical freight flows. And when they see demand shocks, that's when there's those deviations and tender rejections. And so peak seasons, any kind of seasonal demand surges, sort of regionally. That's where shippers should be paying attention to or expecting spot rate volatility this year, as we continue to see the market navigate these little demand surges. It's really about what could create more of a sustained demand surge when we're talking about what could flip this market.
So I guess when it comes to the things that we're looking at that could, change some of that seasonal patterns, what are some of those things that you're kind of watching, keeping an eye on? Because obviously it's almost April. So pretty shortly here, we're gonna have produce season that's gonna come around and be that disruptor. Um, do you kind of think that that's gonna be kind of that main thing to watch out for that's gonna have that spike that's gonna cause that spike in spot rates? Or do you see some other kind of seasonal pattern? Because obviously we just left Lunar New Year, so that was a pretty good bump for a little bit, on ocean rates. But, when it comes to, truckload rates, what are some of those seasonal patterns that we're looking forward to?
Yeah, on a national level, I'm not really concerned till DOT road check or DOT blitz or road check week in mid-May. I think that's when you're going to actually start to see the national averages, whether that's tender rejections or spot rates, start to climb. That period between then and July 4th will really be the next test of where we're at in the market cycle, and just how sensitive changes in demand are to the capacity and the way that it's distributed throughout the country today. But on a more near term basis, yeah, the Southeast is going to start to heat up as lawn and garden and produce season, and everything associated with the warmer weather as stuff starts moving. Look at the forecast the next couple of weeks, unseasonably warm across most of the country, especially south and east. Um, I think those types of weather patterns and that type of seasonality is certainly going to drive increased challenges as demand picks up. But we see the market absorb these pretty well. I think it's really those larger scale disruptions nationwide that are going to cause the big shocks. Like I mentioned, DOT road check week in mid May, followed by you got Memorial Day following up there, and then that lead up to the 4th of July. That 100 days of summer, so to speak, is definitely the period of time that I'm most interested in watching for where we see rates and rejections go.
I am really glad that Road Truck Week is kind of closer towards May this year, because I feel like, as a hardy Midwestern girl, we're in the middle of tornado season, and I just feel like scooching it up into April means that it's just going to be in the middle of tornado season. But also, it's thankfully we have some warning with tornado season, but I don't typically see that impact the freight market that much, obviously, short of a massive, horrible tornado, which we never want to see ever happen, in my opinion.
Yeah, it can be disruptive. I mean, the last time I can recall a tornado being more of a market disruptor, you have to probably go back to Joplin in 2011. Not a common occurrence to see tornadoes disrupt the market, but certainly we've seen that happen in the past. I think in general it's more just disruptive to these regions as you see tractor trailers tipped over from wind, or you see power outages cause challenges for shipper operations at certain facilities. The occasional facility or two taken offline from a hit, but for the most part, these aren't large scale disruptions that are going to have a national impact. I think much more focused on more granular impacts there.
100%. Compared to Road Check Week, where everybody's just, I like to call Road Check Week basically spring break for truck drivers. They just kind of take a little break. They're like, we're good. We're good. We don't need that.
Yeah, it's certainly a time we're advising all the shippers we work with to be prepared, right? If there's flexibility to move that freight early, or to sit and hold that freight until the following week, it's definitely a situation where if something doesn't need to move, you're going to be better served trying to avoid that particular week. But yeah, that being said, we got a lot of regular dedicated shipments. We call it dedicated committed capacity type shipments that, we don't expect any disruption. So freight will continue to move. There's an expectation that it moves, and we'll navigate those conditions. But certainly if there's flexibility, that's huge for shippers that week.
Yeah, and not because we don't want carriers to get the inspections and everything that they need. It's just there's a lot of it and it's a hassle and it just gums up the works, you know? Not that we don't appreciate what the Department of Transportation does to try to keep the highway safe, keep carriers safe, keep motorists safe. We love that part. However, I think it's just inconvenient. You know? It's just inconvenient.
Yeah, I think something like a large number of drivers take time off that week. I think it's pretty high. I think I've seen some estimates as high as like 30+%, which is kind of wild to think about how much. Yeah, the safety of this equipment, if they're taking them off that week, it's likely because they're illegal in some way, shape, or form, or concerned around getting inspections. Big concern we've seen in our industry, and a big reason why a better rate environment is something that we're all looking forward to. Is these carriers need to invest in their equipment, that's aging. Uh, a lot of this case is just for safety reasons.
Yeah. Which, all for safe highways and safe roads. But I like to call it spring break for truckers because they get a little week off. That being said, why is kind of like, I think we've talked about it before, but like, why is it like that period between Memorial Day and the 4th of July? Why is that always such a time for rates and everything? Like, why is that such a good indicator of kind of what's to come for the rest of the year?
Well, I mean, first off, that period is really where you see the ramp up, right? I saw a stat one time that really stood out to me that there's a temperature at which people stop, switch from drinking hot beverages to cold beverages. I think it's somewhere around like 69 to 71 degrees. People switch over, right? And being from Chicago, Memorial Day is sort of like the kickoff to summer, right? And so people get outside, bottled beverage season. They start buying furniture for their patios, they're cleaning up their yards. There's just a lot of new activity that sparked in that time frame with the holidays and eating summer eating season, if you will. And it's back to is a hot dog a sandwich for those of your regular viewers. It's hot dog season, but outside of that demand surge, which creates a test, right? That's a test in the market. How high our tender rejection rate is going to go? How much rate volatility are we going to see? How do we see spot rates uh, jump or react to an increased spot market demand scenario? That's a really good indicator of where this market is at. And again, coming back to, I think capacity networks are pretty well maintained to overall stable demand environments. It's really when you see those demand surges that the capacity gets stressed, and so we really get to see just how efficient the capacity network is, and just how vulnerable or sensitive it is to changing demand. A lot of these carriers that are making money are doing so by getting high asset utilization, dropping hook networks. If it's not really, even about detention when they get tied up at a shipper or at a consignee, it's the fact that you're disrupting their normal flow costs them way more than the 50, 60, 75 plus whatever an hour you're going to pay them for detention. They're really fine tuning these networks to run at high levels of utilization, and any disruptions to that can create some shocks in their network. But altogether, demand shocks are really going to test those types of situations and show us where we're at, and indicate to us just how much progress has been made in the balancing of supply and demand.
I mean, I like that. That's a pretty good spot. Like you said, it's kind of that big stress test. Everybody's getting out. There's more demand for things. Is it hot dog season or is it sandwich season? The world may never know. Um, but kind of in that same vein, that's kind of also a good indicator of, what consumers are doing, what they're feeling, how their spending habits are potentially going to shape up for the whole year. Because I know that if some are spending strong, that's a pretty good indicator that, peak season might have a pretty good spending. But if, we're starting to make those swaps from, a higher end beer to maybe more of those bottom shelf or some of those cheaper brand beers, I know that maybe peak season's gonna be it might be a little thinner. But so right now with consumer spending, I feel like we're kind of almost getting to like, I feel like I'm kind of almost getting mixed messaging. So some sources have said that, oh, consumers are still spending is still strong, it's doing great. But then you see massive retailers with $1 billion down for the quarter. So how do we kind of wade through the noise and say, okay, this is what consumers are actually doing, and this is the things that we need to watch to kind of see as an indicator for what could happen, for the 100 days of summer or even the rest of the year.
Yeah, I mean, for a stable freight market, you want to see stable consumer spending. The consumer is really what drives good movement across the country, and really first to speak to consumer sentiment, the sentiment data released from University of Michigan example, they're showing declining consumer sentiment out there in the marketplace. But what's really interesting, I was listening to somebody speak to the relationship between the hard data and the soft data being sentiment, the hard data being the actual turned in spending data, is that, we're in a strange scenario where sentiment, the soft data is kind of leading the hard data. We're not exactly seeing it in the hard data just yet. Yes, there's a lag, but they spoke to a lot of times when you see that soft data leading the hard data, consumers sort of responding to news as opposed to responding to a high unemployment rate or negative wage growth or something to that degree. Right now you see consumers responding to fear, uncertainty, and news cycles, and that's something that really gives me some pause and gives certain economists pause as to really how deep these fractures are or not in terms of the consumer spending ability. We've seen a relatively strong labor market, relatively strong wage growth the last few years. I think there's some signs of that weakening a bit, but without the hard data, we're not really seeing any reason to be overall concerned around some kind of demand cliff as it pertains to consumer spending. That doesn't change the way consumers are feeling. As a result, you may just see them shifting more to discount goods, lower price goods, away from some of the higher ticket items, things that are less needed. Essential spending is not really struggling. We're seeing it more on discretionary purchasing where there's any kind of pullback. So until I see more of that hard data, I think similar amount of goods will be moving across America's roads.
I dig it, but we might so we'll still continue to see some of those smaller necessity goods, but maybe it's not the year to buy a boat. You know, I don't think we'll see an uptick in like lake boat sales.
There's probably some good like boat rental facilities you can check out for the weekend or two that you're going up to the lake or something. But yeah, you might see a pullback in larger ticket items. Again, that comes back to the type of consumer. The higher end consumer may not be as impacted as the lower end consumer. Really across the board, we expect to see some inflationary pressures here from some of the policy, and it'd be interesting to see how much of that gets past the consumer and the impact it has.
I'm looking forward to this conversation again in a couple months to see how things have changed. I, for one, hopefully would like it to change a little or to change in a positive direction. I don't know that that will happen, but that's my goal. I'm putting it out into the universe. We'll see what happens, right?
See what happens. Anything can happen these days.
All right. So, David, it is time for possibly the hardest hitting question that we have for you today. And I want to continue to thank you for being a great sport and answering all of these completely unhinged questions. So, for this week, if a freight broker had a mascot, like the entire industry, if like freight brokers had a mascot, what would it be and why?
Oh, it's a tough question. The first thing that comes to mind when I think about freight brokering is a telephone, and more specifically the broker headset. So maybe like a big fuzzy, old school telephone, but like instead of like the typical like you know handheld device, it's definitely got a big old headset on. That's just to me the old school broker, and with mascots, you got to go old school.
Would you make it like the old school, like, brick cell phone that, like, you almost needed 2 hands to hold up? Or would we make it kind of like a cool, like, phone headset mix where it's like a nod to the old and then, like, to the today, you know?
Yeah, I'm thinking like old school, like, where you pick up the phone and there's like those two prongs that come up,
Oh,
like
like old rotary phone.
not quite that old, but definitely a touchpad. And I don't know. That's just my experience
Like a
being in
desk
this
phone
place.
from the '90s.
A
That's
desk
what I'm
phone from the
thinking.
90s with
I like it.
an oversized headset for sure.
I could see that, like, walking around at, like, your AAA baseball stadium, like, walking around that. I think that'd be pretty cool. I like it. That's a pretty good mascot.
It's the best I got.
Yeah. So if other people want to find out more of the best that you have, specifically maybe the market intelligence report, maybe they've got questions they want to pick your brain on. Where can they find you outside the show?
Yeah, I always advise people first to go to our website, ridelogistics.com, and check out our insights page. All of our content is available there and easy to navigate to for free. You can subscribe to that content, reach out with feedback or thoughts or questions to my team on that page. Additionally, very active and available and present on LinkedIn, and have a presence there, and certainly a couple of times a quarter right here on Check Call, as we like to remind the viewers every time. So, yeah, thanks, Mary. Appreciate being here and the opportunity to talk about what we're seeing with you as we do so frequently.
I like it. I love our little market updates. They're fun and it's a nice easily digestible way to get the information out and kind of give people a little pulse check. I like our little pulse checks.
We appreciate it as well. Thank you, Mary.
You can find Check Called the Podcast anywhere you get your podcasts, like Apple Podcast and Spotify. Don't forget to check out all the other incredible FreightWaves shows. And don't forget to subscribe to the newsletter on freightwaves.com/checkcall. See you on the internet.